Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York on Tuesday, 5th day of March 2024, and this is the evening report for gold and silver. Gold continues to rise, now for the third consecutive day since breaking above the 50-day simple moving average on Friday. However, today is a little bit different in that gold is well off of the intraday high of $2,150.50, with April gold currently up $15.60 and fixed at $2,141.90. We can also see that over the last 3 days, the price ascent has been characterized by smaller gains each day. And as we will show in a couple of technical studies, we are getting very strong indications that gold is very much overbought. Although silver traded to a higher high and a higher low than yesterday, we are seeing signs of weakness and strong resistance at the 50% retracement that occurs at $23.99. We are getting a small red candle. It is not a dark cloud cover. Although it opened above, it did not close at or below the midpoint. But the failure to close above the 50% retracement, and also the fact that we have a red candle with a higher high and a higher low, shows a failure and very strong resistance at $24 per ounce. Lastly, the dollar has not played very much importance to the recent climb in both gold and silver. The dollar did trade lower today, yesterday, as well as Friday. Nonetheless, the dollar's weakness has not had a large or profound influence on the recent rise of gold and silver. As I spoke about during the pricing section, although gold has had a strong upside rally, there are a couple of technical indicators that are pointing to the market being overbought. We are looking at a daily candlestick chart of gold with the RSI, the Relative Strength Index, underneath it. The Relative Strength Index is basically an oscillator with a scale of 0 to 100. We look for moves either above 70 or below 30. If it is above 70, we consider that to be an overbought scenario. Under 30, it is oversold. When the relative strength index, as it appears now at 76.11, has passed the line in which we would consider it extremely overbought, it is a signal that we could in fact see an imminent price reversal. The stochastic oscillator is another momentum indicator, and what we look for is when these oscillators move above 80, and you have two lines here, one representing the percent D and the percent K. We are looking at a comparison between the highest high over a certain period of time and the current pricing. So the stochastic oscillator moves above 80 when the recent highs are very near all of the recent highs over the certain period of time that we're looking at. And then we look for a cross of this blue line, the percent D, to cross below the percent K. That is an indication of a potential imminent reversal. And that's exactly what we're seeing here. We do have our cross. We are well above 80. Currently, the reading is at 92.29. We can see that gold has opened in Australia roughly at the same closing price that it had at Globex and the New York Exchange. And while the caveat is that these types of oscillators can remain overbought and continue to move higher, the fact that we have the RSI and the stochastic oscillator using two different techniques indicating extremely overbought scenarios means that it is time to actively look for a key reversal in gold, and that is exactly what we are currently seeing.
This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.